Well, good day all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Thursday. We're at the 3rd of June, 2021, about 6:45 p.m., and that is Central Time. You know, Kenny Rogers said you gotta know when to hold them, know when to fold them. Why go through these crazy jobs reports? That's the thing that amazes me. And people do it. And they look for these crazy action things and they think they're going to make sense out of it. Nonsense is the better word. The market is looking for reasons one way or the other to try to figure out what is the Fed going to do. Is the Fed going to say, let's start talking about tapering, or are they going to push it off further? Tomorrow is going to be a key element to that. A good jobs data report that comes out, and I think it's at 7:30 in the morning. Well, they're looking already for 670,000 number. So if they're looking for that number, they got a high bar. If they hit it, does that mean that maybe the last report was just a fluke? Could be. What happens if they get a number that's 300 or 400,000? They miss that number by a lot. They'll be saying they got to put that off. You get another thinking. So are we going to talk in the marketplace, oh, the Fed's going to start talking tapering? Talking is not tapering. Talking about tapering, or is the Fed going to not even talk about it? We don't have this jobs market under control. And you're trying to play that in a major manner in the financial markets and make sense of it. It can't be done. Wait. That's what I tell people. You know, trading is almost like going to an airport or a train station. There's always another one coming. That's what I tell them. Futures especially. Stock market investments are different. Futures are very different than that because of the vast amount of leverage and the risk that leverage brings. Leverage is wonderful when you're right. It's hell when you're wrong. When you look at this market, you're still for the week. What are you down? 1/3%. You wouldn't know it from the wild swings in the market, but I swear to you, that's all it is. It's like nothing happened. When you look at these charts, you still have not broken through the high that I've shown you each day now, up here or this low. At the beginning of May, you set into place a channel of that, and you haven't come out of it. Now, when we start looking at the price action, what the market actually did today is you broke the pattern of higher lows and higher highs. You have an outside day to the downside. You followed through, you broke, as you can see, and you're getting a bounce. That's all. So now the pattern's a higher high and lower low. That is not a trend. An uptrend is higher lows, higher highs. Downtrend, lower highs, lower lows. You don't have anything right there. When I put moving averages over the market, we had talked day after day this week. I said if the market gets back to this 18-day average to do so, you're going to break that pattern of higher lows and put the market back into a neutral pattern. That's exactly what you're doing. Where's the Bollinger Bands, the resistance? You couldn't get up to it, but you're caught in this sideways band. If you don't see it, let me open your eyes. There's that top part we talked about, the bottom. You've stayed basically in it. You're not narrowing them. You're not widening them. They're just sort of hanging here. And in the momentum, you're very overbought in this market. Now, tonight's action, both numbers are not over 80. So you got a ways to go if you're going to embed. If you take out this high that we had that outside day down, it doesn't matter. Today's outside day doesn't matter. There's nothing on this chart I see that's all that exciting right here. When I come to the NASDAQ, you're overbought. When you're overbought, do you think you're getting new money coming into the market? Embedded, yes. When a chart embeds, that means that it's converted itself from overbought. Now it's locked into a trend and people start chasing trends. That's not what the market did here. And as I said, why go through these reports? I don't get it. I'm not scared of normal reports. Every day practically we get some economic data. But it's the big boy ones, the ones the market has alerted you that they care about. It's when you're looking to see, is the Fed going to make a major move on an interest rate at the next meeting? You know when that's there. You don't have to be bright. Read the papers. Watch financial TV. They're telling you what, is it going to be a big one or a small one? We have a big one tomorrow. What the market did here is interesting. We have an outside day to the upside. You fell on it. You normally, when you fall, make a run to that 18-day average. I don't know if that's close enough. I think the bears are still in control until you take out that day's high right up to that Bollinger Band. Would I be brave enough to say, this is a great place to go short to get back there? Yeah. In the Russell, this is different. We cannot count tonight's action because we don't know how you're going to settle on Friday. But we can count Thursday. Both numbers are over 80 on the slow stochastic. They're over 80 on Wednesday. They're not over 80 on Tuesday. Today is the market going to embed, which gets me very bullish, the market all of a sudden, or going to fail? Generally, you fail. That's all I'm saying to you. So we're going to see what happens. Very exciting day tomorrow. We get to the VIX, and as long as you keep this bearish reading without the red number closing over 21, and that's what I told my morning subscribers, I think the pros are selling it. And I think today they did. We'll see what happens. In the T-bond market, do you really want to trade the sideways action that happens, by the way? Do you see this high and that low? Remember what we showed in the stock market? Same days. You've been stuck in this. Recognize patterns and recognize that the market's looking for direction. And that's what we're doing. We're looking for direction. You have the swing line down, but if you take out the highs of today, which was 156.23, the odds favor you're going right up to that upper Bollinger Band. If you get a report that is good for the economy, a lot of jobs, that should be bearish the futures because that means interest rate yields can creep higher. And if the market closes under 155.23, you're targeting 154.2. So we'll see what that does. In the 10-year note, you're right on this number, the 18-day average. You tell me you're not stuck in sideways action here. I think it's the third week that I've been pointing that out to you. Is this a major top or a bottom? To be a bottom, you have to have some really terrible news on the economy. To be a top means you're gaining those jobs back over time and interest rates start moving higher. Remember, this is an inversion market. The lower you go, the higher the yield. Dollar index. The dollar index stayed oversold, and oversold conditions don't attract new selling. And you stalled out. Now you're back to the 18-day average. Today you're making a run. So the first resistance, the upper Bollinger Band, if you've taken my enhanced Bollinger Band course, pay attention to that. Maybe you get to the 100-day. Who knows if you had some news that sent everything crazy. And if it falls back, the 18-day average is your support again. In the euro, it's the flip-flop of the dollar. So you were overbought like mad. And now the market's got its correction underway. Maybe you get to the lower Bollinger Band, if you can clear that, the 100-day. But I think you're getting towards your support levels. But I'm going to repeat myself. And I like repeating myself. Why go through these reports? It's easier after the fact, and I'm not talking 5 minutes after the fact. I let the market settle back, and I work my way in terms of my recommendations for my clients, telling them what I'm seeing. I work my way back for them on it. But I'm not standing in front of a bullet train and trying to jump just in time. Lower highs, lower lows, bearish. I think the pros will sell this market now, even in front of tomorrow's report. What does this have to do with anything? And I think they'll sell it at 140, 140, straight stop over the high of today, which was 142.03. So we'll see if that works out for them. Objective, the lower Bollinger Band. The question in the UK, by the way, is are they going to open it fully up, or are they going to have a moderate opening? Portugal's again back on the list where countries are saying if you visit there, you got to quarantine. That's going to really hurt their summer economy. Momentum up, trend down, flat action in Bitcoin. Then we get to the energy markets and the differential between the Brent and the WTI just drifting here in the 270 level, been doing that. You're fighting at the upper Bollinger Band, and the question is, are you going to embed? Now, embedding means you're going to get both numbers in the slow stochastic for 3 days in a row being over 80. So you had one today. Wednesday, you did not have it. Folks, you're just overbought. against an upper Bollinger Band, I think the pros are taking money off the table. I don't think they're trying to push the market now higher. I'm probably wrong, but that's what I think. What about WTI? You can't count Friday because we don't know where it's going to close. So you can count Thursday, you know where it's at. I can go to the day before. So the Tuesday have both numbers over. Nope. So tomorrow's going to be the day you got to pay attention to that one. New highs for gasoline, but you're at an upper Bollinger Band that's overbought. I am not bearish these markets. I think there's a better entry point is what that teaches me on my way of trade techniques. And when I keep telling you about this enhanced Bollinger Band course, I want to explain it as simple as I can. If you know Bollinger Bands, I think I have a way to give you a doctorate degree in them. It's 13 chapters, each about 6-7 minutes long. I show you the examples. They're going to pop up on all your charts. I show you how to use them, where to go with it. You take it the rest of the way. The course cost, if you're a subscriber of mine, a paid subscriber, $60, not it's $75. You want to learn something? This is how to do it. I'm Ira Epstein. You have a great day.